bottom here. So yeah, so that's a good angle. There we go. So there we go. Okay, so March 19th, the year 2021. It's about 9:30 p.m. Eastern Standard Time. Sorry about the phone looking awful, but that's the best I can do, So yeah, let's begin. So DHT Holdings, that was my selection for the oil and gas sector. So again, pretty cheap. I recommended that a few months ago. So again, slow growth. I like that it pays a dividend. It is a dividend earning company. So yeah, let's begin. So right now it's at let's say 3 months ago. Let's go back 3 months ago. So if I would have, a funny thing, I made this portfolio and I haven't even fully invested in that portfolio. I have a few of them on my list because to pick and choose, but I haven't chosen all of them. I mean, it's crazy how I've chosen all those companies and I haven't invested in all those companies, just a few. But again, I think I made good selections. Again, I try to provide the best information out there and something people look forward to. So yeah, let's begin. It's at $6.45 right now. As of today, we almost make like a year from the lows from last year. So 1 year update from the coronavirus and everything crazy that's been going on. It's been a wild ride, I can say that. I think the stock market is overvalued in a lot of areas, like everywhere. People saying, "Oh, lately the news and stuff." I watch it too, but supposedly the stock market is overvalued in the tech stocks, but I think it's more than that. I think it's overvalued like so many sectors, like in general. Like every index, every stock is pretty much overvalued, especially the big names. Sorry, I'm moving so much. But yeah, I think a lot of cheap stocks still have room to grow. Those are, the small caps are really good selections right now. But yeah, a lot of big names and the majority of stocks is just insanely priced. And I'm just gonna pause and hold cash on the sidelines. So yeah, this is a $1 billion company. Let me highlight that. Let me use my marker. Got my marker out and try to make it easier than what I'm pretty much used to. Hold up, there it is. Let me try to prepare myself. So small cap company, I like this. Kind of draw on my phone. This is kind of low budget, but I don't have nothing fancy, so this is all I got for you. This is all I can do. I like this. I like the earnings. It can cover the dividend. I like that. And I like that. I like those two. That percentage is pretty good. That's still pretty low. That is pretty low. But hopefully that goes up. All the other numbers look good. I'm looking at them. Everything else looks pretty good. There's been more volume, meaning it's getting traded more often. So let's erase that on my list. So let's look at the DHT the whole year. No. Let's look at that the whole year. So yeah, it's been slowly growing. The 3-month chart. No, take that out. 3-month chart looks good. Hold up. Yeah, okay. 3-month chart looks good. Yeah, that looks good. Even the 1-month chart I like. Wow. From the 8th, on March 8th, look at that shot. Well, I call it a shot. Yeah, look at that. Look at that bounce. From there to there, and then from there to there. So wow, that was a strong week. That was about then it dropped again on the from $6.68 to about here. Was 620. What about 615, 616? So what, 50 cents more or less about? So yeah, not too bad, not too bad. So moving on. Earnings like that. I don't know why it looks blurry when I move it in. I don't know why. So yeah, I wonder when they report earnings. Wish they would say. Let's look at the numbers. So return on equity is what the company regenerates, and then the return on assets is what management does when they make changes. So basically, this has to do with the business itself, and this has to do with the people who manage the business, like the managers and directors and all that make changes to generate more income. They're basically in charge of the changes to grow the company, or however they want to manage the money and the decisions they make within the company. So these two are very, very effective, but definitely ROE I think is a little. If I had to pick and choose, ROE would be better. But again, they're both to me equally. A lot of things are just important. Anyway, I have strict guidelines for what I choose. Surprisingly, again, 2020 results. I don't know if I first made the portfolio if I had the 2020 results, but those are strong percentages for 2020. You don't really have strong percentages like that, and they dropped debt during 2020, which is a really good sign. This is, I think, one of the reasons why I chose that company. Usually, I do because of really low debt. Yeah, so they're in a good position. I like their numbers. Let me see the earnings. Oh, they just beat it for the whole year. Book value, I don't really look at that. Cash flow, I do. So that's good. They beat it. Net income. Okay. Okay, that's good. That's good. Yeah, so they did drop debt, like I said. So that is about 30%. Those are good numbers. And I don't know what their rank was the last time, but yeah, they're earning. And again, they could cover the dividend, and yeah, looking good. Yep, I like the numbers. So that was the most important category in there. So this I don't need to look at. News I don't really look at because they mention random news sometimes in that section. I don't look at that. I don't really look at that much. This I look at sometimes. What I have been looking at is short interest. Not that I do it, but it's just to pretty much have self-defense and see that it won't go down, or just help support that your decision that people aren't trying to short the stock and stuff. So yeah, as you can see, the dividend payments. So yeah, in 2020 they were still paying out and they were growing it, but towards the end of the year, that's when they cut it, which is not too bad. This is why I recommend it, because getting in, I know they're gonna raise it, but if you got in here right before that cut, it kind of sucks because most likely the stock drops, and then I know people leave, because I mean you don't know how much more lower they're gonna go. But yeah, after November that looked like a good entry point to get in, because I figured um the balance sheet and the finance info that I have in front of me, I figured they will raise it. And again, like, they lowered the debt throughout the year, so I mean it only makes sense. I mean, you can tell with looking at the numbers, playing with the numbers, seeing what they do. You can tell how somebody manages. Well, it's not just one person managing the money, but you can tell how managers do good when they manage money. You can tell if the company's good or not. But again, yeah, for the whole year, last 5 days ain't too bad. Looks pretty flat right there, and yeah, they're doing good. Um, I'm already 12 minutes in the video, so I'm just gonna show you the last bit of numbers there. That's the return on equity. They don't show return on asset because usually it ain't that much, and it's more important anyway, the ROE. I don't know where they got this number. This isn't accurate. I mean, there's times where I look at numbers and they're just, whoa, okay. Yeah, I think 3% was the correct number. I don't know. It's just maybe a glitch or something. It can be a little bit off at times. But yeah, still a good selection. But again, like, a lot of companies are overvalued. So the comparison between this one is going to be against, let's see who is the top earner. See, they have been beating earnings. Let's go to the top earner, click on earners. Like I said, SMLP, so let's click on them. Okay, whoa, that's bad. Let's look at the numbers. Wow, it's kind of crazy. For a company earning this much, I wouldn't expect this. Why is this not writing? Come on. Is my ink dry? Anyways, I'm gonna point to it. I don't know why this is dry. Maybe just gonna write on the phone. It's not meant to write on the phone. But yeah, that's the best I can do. Let's try that again. Let's try that again. I'll just point to it so that way you guys can see. Just follow me through on this. So Summit Mid, let's go with the correct name. Let's go with the correct name. Summit Midstream Partners. So Midstream, they actually produce. Midstream is producing oil and gas and all that. So they develop, owning, and operating midstream energy infrastructure. Yep. Interest in Ohio as well as Summit, Utica. I don't know where these places are. So yeah, providing natural gas. That's still gonna be around for a few years. I still like it until I get a cheaper EV play. Yeah. So yeah, I was gonna say, so at $26.67, I wouldn't expect this market cap to match with these earnings. And that's because their PE ratio is not even above 1. This is weird. This is the lowest PE I think I've ever seen ever in my entire life of doing stock evaluations. Let's see. Let's do 26 times 15. I don't even know the math, but yeah, it just uses, I can't do it in my head. But yeah, that doesn't match. Those earnings with that price, it's way too cheap. Yeah, that's a negative. I don't like that. That's definitely a negative after so many months have passed by. Let's look at the 1 year. Let me look at the 1 year. It must have been flat or dropping slowly. Well, it's gaining, but it still looks a little flat. That's insane. I just don't get how this PE ratio, I don't like that. So, yeah, in 1 year, let's look at the last 3 months. Last 3 months, it's been gaining a little bit. It's been gaining some steam. Let's look at the 1 month. So from what? There we go. So from $20.64, you probably would have made around, even if you sold right now, you probably would have made around, let's say about there, 20, let's say 27.9 or 27 flat. You probably would have made $7. $7 in what, a few weeks from earnings. But yeah, anyways, these evaluate that this doesn't make sense. Like I said, these top companies are not making sense. That's too much buying. It's about to cross. Then yeah, it looks like the trend is gonna go down again. Has been some buying, not as much as it should be. News, I don't really look at it, but anyways. This is the last, yeah, that's the last date, which was Friday. So it's been mostly buying, support and resistance. I don't know if that's accurate. I think this line should be like flat here. So dividends, they don't pay dividends. Last time they paid was, yeah, so they cut it in 2020. See, yeah, 2019, then they cut it. They said, yeah, we can't pay out. We're in the deep hole. And I think that's all she wrote. Yeah, the 2020 numbers, look at that. 2020, they did good. I think they struggled last quarter. I think that's what it was. ROA, EPS. So yeah, that's what it was. Their debt went up. That's why it didn't make sense. I'm like, okay, the ROE looks good. The ROE looks good. ROA ain't bad. They probably lost some cash flow, but they cover the cash flow with the cuts that they made with dividends. I think it's because of the debt. They couldn't handle the debt load, I think. But yeah, that's why these numbers didn't make sense. It's probably the debt load and the sales. The debt and sales, that's what it is. Yep. That's just gonna make the company suffer a little bit. They're gonna have a rough year. Even though they have these posting these numbers, these ranks, they're gonna have a tough year. Yeah, this needs to go up a lot. This needs to go down. If they could sacrifice a little bit of earnings to pay off some debt, then that would help. But even then, they gotta make sales regardless. Yeah, this was their best quarter, but that's how it went flat again. And then I don't know if this is in the negative for the next quarterly earnings. So there you have it. It's weird to say. This is a super undervalued company, but it's not even worth buying because the ratio, the PE ratio is not even like worth it at all. Like if it was a 5 at least, then okay. And then there's no buying pressure here. If this would have kept going up, there's still no buying pressure. It goes up and then it went down. It needs to have that continued trend. Even after a year, it didn't even spike up that much. Yeah, it's awful. Wow. Like I said, the PE is way too low and they're earning way too much. So I mean, where's the price that matches that earning? It just looking at the numbers, I could tell. I don't know the exact price is what I'm saying, but I know that's not the price is what I mean. So yeah, it's insane. There's just no interest for people in general to get the stock price up is the final answer. So there you have it, DHT versus SMLP. I hope you guys enjoyed the video. So I can look at the numbers again. Okay, let's do where's DHT? Because it came in number 15. In that way, no, it came in number 16. So you have DHT and all these other guys. Come on, DHT. So DHT, slow growth. I mean, I still like it. Like I said, let's look at the numbers. Here we go. So there we go. Final comparison. So you have, look at those numbers. Obviously, they're number one, below out the competition. But again, still slight earnings here. I give this sector a few more years because people trying to introduce the EVs, but I still think EVs have a few more years to go. So yeah, book value. I don't really use that. It's had to do with dividends. So it came in number 22. SMLP. PE. Who has the highest PE? Look at that. They have the lowest PE ratio. That's bad. So DHT had a PE ratio of 4, so still undervalued, still slightly growing. These PE ratios are so low for this sector. Now that I'm looking at it, look at that. I don't even see over 10. Barely. A lot of these companies. Look. Wow. Yeah, now we're like in the 10s here. Now we're in the 10s. But even 15 is like borderline, It's like, geez. That's a good entry point. But then after that, yeah, all these is a whole negative after that, yeah. So yeah, I mean, I don't look at PB, so return on equity. That's an overall return. It's not like you're gonna get 17%, it's just if you add in the directors and everybody else getting their cut, you only get a small percentage of that, which is the dividend. But yeah. So this is definitely worth watching. 40% dividend? Yeah, I don't think so. Yeah, I don't think they pay a 40. See, it says 40, and then right here it says 3%. So I don't get that. And there's no price. Yeah, this is wrong. That is wrong. But anyways, these are other dividend companies. So yeah, lowest debt. So yeah, there you have it. DHT versus SMLP. I hope you guys enjoyed the video. Stay tuned for the next one. The next one, I'm gonna switch it up a bit. I'm not gonna do the comparison video. You know, I'm still gonna do the comparison videos, but I just want to introduce something else. So thanks for watching. I'll see you next time.